It is the day after the Fed Day. It is Thursday, September 18th. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. It's supposed to say money, not percent. Member of FINRA SIPC. Where was I on that? All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is unchanged. The YouTube title is supposed to be I put my money where my mouth is. Instead of the dollar sign, I put a percentage sign because I'm losing my mind. But you know what I mean. All right, let's dive in and talk about it. SPYs here are up 0.5%. Qs are up 0.9% on the day. The IWM is up a whopping 2.5%. That's despite TLT being down a percentage point. So this is the only area, the only spot where we saw buy the rumor, sell the news was in the TLT, not at the indexes. So at least on the initial reaction here, I'm very, very wrong on what my thought process was. The dollar finished up also. So interest rates and the dollar both should be headwinds to the stock market today. They were not. I'll talk about why in a minute. What else? Oil is down a little bit today. Bitcoin's up 1.6. Ethereum is up 1.8. And gold is down small, down 0.4%. All right, so look, tremendously strong market today. Not really for the SPYs that much. It's interesting because the SPY is up 0.5%, the Qs are up 0.9, the IWM is up 2.5. Most of the time, the IWM is somewhere in between the performance of the SPYs most of the time the SPY, the S&P, is somewhere between the performance of the IWM and the Qs. Today, the SPYs lagged both the IWM and the Qs. It could be because the Dow lagged. The Dow was only up 3%. Interestingly enough, the RSP is only up 0.5%, despite the IWM as much as it is. The RSP a lot of times is a little bit more similar to how the Russell itself actually trades, but not today. All right, so day after the Fed, right? The day after the Fed has the potential to be a trend today. Today really wasn't that for the SPYs or the Qs. The IWM, it was. The Russell basically trended higher with some good waves all day. But the SPYs and Qs gave initial squeezes. We'll talk about that price action in a second. And then basically went sideways for the entirety of the rest of the day. So we did discuss how, we talked about this yesterday, the day after the Fed has a higher probability of being a trend today, but maybe that's less so for today specifically because of some aspects of market structure and market dynamics. So not entirely surprised to see it. All right, where do I even begin? I have and I maintain for the moment really strong conviction to the downside on the market. I could be wrong. I could certainly be wrong. I would say that we have fairly successfully as a team here, and I always like to say team, but in this case I'll just say me because I'm typically the one doing these meetings. We have done a phenomenal job as a team basically calling out every single major top and major bottom of this market back to COVID. Back to the COVID low. I did not call the COVID high. The COVID high I got smoked on actually, but the COVID, starting from the COVID low, I feel like we have pretty much called out almost every major high and every major low in this market. And I haven't always perfectly capitalized on them from a P&L perspective. I've obviously tended to because I've tended to be right on that. We've called out every major top and bottom basically over the course of the last 5 years. And now to give credit to others who are on the team, the way in which I have been able to do that in these meetings is because of what I have learned from other people here on the team, particularly with this understanding of, well, we're always talking about market structure and market dynamics, understanding a lot of these systematic flows. And I've learned a lot of that from many of you who are more knowledgeable than me. Special shout outs to Pat and Bill, but not only to you two. So it's been great. With that said, as I say, we've called every single top and bottom. We haven't always called it perfectly to the day. Sometimes we have. Like back in February, we literally called it to the day. But a lot of the times it's more recognizing that we are now in a situation where the flow of fund dynamic has a severe risk to the upside or a severe risk to the downside, recognizing that, and then being generally correct on the timing and being even able to be, narrowing it down using technical analysis. I could be wrong on this one. It would not be impossible, or I could be right, but my timing could be off. But the bottom line is, I put my money where my mouth is, and I do it, with. I'm trying to find a. What I want to say is big with big balls, but I'm probably not supposed to say it that way. I'm just looking for better words. But I do it with size. My P&L swing on the short from my shorts between yesterday's low and today's high is enough to buy a home in cash for a lot of places in the world, and it is what it is. It's a lot of money to me. It's a lot of money to me. I'm not worth probably not in New York City, probably not in Los Angeles, but enough to be able to buy a home in cash. And that's a P&L swing that's against me. But I put my money where my mouth is. I think, and I still have the conviction, that's the hardest part, that we can sell here in this back half of September and have continued weakness potentially through October if the market can just actually break. And what we keep needing is a catalyst. And Pat keeps describing it really well when he says, like, we keep looking to the next catalyst, and we keep looking to the next catalyst, and we keep looking to the next catalyst. The difference now is the market dynamics, I feel like, are more set up for it than they have been in any other time in the past. The past, like, couple months here. July has a ton of seasonal strength. August, you are a little bit weaker in August, but you have the strong corporate buyback. September, in this first half of September, we've just had this massive positive gamma structure. I could be not putting enough weight on the poor, what's the word I'm looking for that describes like how people feel. There's a large degree of bearishness in how people sentiment. Thank you. I could be not putting enough weight on the poor sentiment that's out there for a market that's at all-time highs. I could be not putting enough weight on the institutional money that hasn't bought in enough on this market that I think is really getting squeezed massively on a day like today. That is definitely on the other side of the market. But outside of that, I maintain a lot of conviction here that this market is going to give some degree of a pullback, and what that degree of a pullback looks like I need to assess as it comes. But more than just, since the April low, we have like 3 instances of 2-day pullbacks. It's going to be more than a 2-day pullback when it happens. And honestly, the way that this market is now really beginning to squeeze, and I was chatting about it with my buddy JR, who runs one of T3 Live's virtual trading floors, and he agrees with me. The way that this market is starting to squeeze now is actually what sets up even better for the bigger and faster down move for when it actually occurs. There's a lot of air pockets now as this market and a lot of these stocks are squeezing up. And I think that's where we're at. The Fed day yesterday met expectations. I read one analyst report this morning that described it as a dovish cut, and I read one different analyst that described it as a hawkish cut. I think it depends on how you look at it. So maybe we could describe it as somewhere more in the middle. The dovish side is the dot plots. The hawkish side is Powell's language that's around it. So I read two different takes on how they're describing it. If you're viewing it as more dovish, then the market should continue to be able to hold in a little bit better than if it's more hawkish. So that's hard to say. But what happened with today's price action that created the movement, in my opinion, is a combination of two things. Uh, and it's also part of why I'm still maintaining my bearish thesis and thought process for the market right now. I think a lot of the move higher today came from, and we started to see it a little bit yesterday into the close, the VIX moving lower after the event. And I think they call that like a Vegas squeeze or something. But basically, like we saw it like immediate after the election also, where I think people were hedging themselves. You know, the election, not to get off topic, that election period was also an anomaly, similar to how September's been an anomaly. October of 2024 was an anomaly. Historically, October right before an election is very weak. And then once the election happens, they buy the market all the way up. And I think what we saw in October of 2024 was like a VIX that was, I'm going off memory, but I'm certain that I'm right, a VIX that was much higher than it should have been, given that the market never actually went down. Almost very similar to what we saw in the couple days here in front of the Fed, where the VIX was moving higher kind of with the market, and we were like, is it a divergence? Technically, yes, but it's just because people are hedging in front of the event. And then what happened was, back when the election actually occurred, this huge squeeze that we had that lasted for 3 days before rolling down and giving a bigger pullback. I remember because I was short this move and getting squeezed on that move, and then caught this roll down pretty perfectly, got out of my shorts into that down move, ended up making money on the trade, but it was like stressful. This squeeze higher here was that like Vegas squeeze of the VIX compressing back down, and that causing the market to squeeze higher, even though the market never went down to begin with. And this price action today felt very similar to me, right? If the VIX had gotten up to into the event, prior to the event, as high as 1675, and then even when the market crashed down to the lows of yesterday, it was a pretty deep pullback yesterday. I'm sure everybody remembers that. The VIX wasn't able to make a new high. And that was because pretty much immediately after the event was over, even when the market was going down, people were exiting those hedges that caused the VIX to be able to move higher to begin with. And this, then you can see into the close when the VIX really crashed from like starting at like 3 o'clock, then the market really kind of began its squeeze. And I think that today was a hangover from that. You know, VIX opening up at like $15.10, the market squeezing higher. And then at a certain point during the day today, though, we did actually see some small degree of what I think is more of a real divergence, because now it's post-Fed, where the VIX actually was going higher and the market was continuing to squeeze up as well. So I think that the market today was a combination of that and a combination of just shorts getting absolutely murdered. And that then circles back to the strength in the IWM, which is where most of the shorts are located, and all of these QSs. And there's a whole bunch of them. You guys were giving me some symbols, I forget when, like at 233 that I was looking at. I don't even remember what they all were. But there's a whole bunch of these like crap companies that aren't really worth anything that were up 18% today, which is what QS is up. And they were just squeezing them and squeezing them and squeezing them. And then that created just an overall dynamic where this market was basically forced to push higher. But I don't think that the market is moving higher in a healthy manner anymore. And to me, that is one of the things that's enabling me to maintain this conviction more to the downside, that I think we have to get into this OPEX in order for that to happen. Maybe we see some selling tomorrow, but the real window of weakness, if you want to call it that, technically starts on Monday when we lose the gamma bid. Because, you know, I don't really know who's left to buy. It's not the systematics. Retail has, I saw a chart this morning, was a net seller last week. It seems like it's just the fund money. And like I said, maybe I'm underestimating the power of this unusual circumstance of pretty low and weak sentiment with a market at all-time highs. You don't see that very often, and still some degree of under positioning from the funds. But outside of that cohort, I don't know who's left to buy, and I'm looking at a market that I think is moving higher now in an unhealthy way, not exactly going parabolic, but having a parabolic kind of nature to it, and being led by the areas that are most speculative and most short. And again, maybe that's just because, well, when interest rates are going down, the things that are most speculative are what should catch the biggest bid. As kind of a counterpoint to my own point. But that's kind of where I'm at. So I am sticking with the short side of the market and continue to put my money where my mouth is. And if I'm wrong, then, I will take a really big loss and I'll move on with my life. It just is what it is. But at the end of the day here, we have a little bit of a doji in the SPYs. We have a little bit of a doji in the Qs. And we have an IWM that's up 2.5% and closed on highs. So the Russell looks fantastic. And the Russell not only is the one area where the shorts are primarily located, it's also the area where what I had seen, and my dad is a little bit old on this, where there actually still could be additional systematic buying. But look, I'm looking at some of these names, and look, I know SanDisk is cheap, fundamentally. I know that STX is not an expensive stock fundamentally, and I know that there's been a little bit of a change in the theme here where these data storage companies can do better, and are probably worth more. But like the fact that these can't even downtick like 20 cents with the degree of extension they have, I've almost never seen anything like this. It's one thing when it's like QMMM that is squeezing, which is just a stupid low flow stock. It's something completely different when you're seeing like a SanDisk that this thing hasn't touched its 80 EMA on the daily chart basically this entire month. It hasn't even gotten close to touching its 80 EMA on the daily chart this entire month. This stock goes up 5 to 10% every day, with no new news, no new nothing, just kind of continued hype. And what was it? NVIDIA getting involved with Intel, squeezing the entirety of the semiconductor space higher with a select few stocks that are viewed as losers from the deal, and also bringing those other names higher. Like this market to me is just not moving in a way that's healthy anymore. I have to remember that markets can remain irrational for longer than I can remain solvent, but I think from a timing perspective that the timing is here now, honestly. Maybe as early as starting to see some selling tomorrow, maybe, it's more like early next week. If, October could be a little shaky also, but if like October 1st comes around and the market is still doing exactly what it's doing, still in its trend and still closing at all-time highs, then I probably will, liquidate some of these shorts I have on for huge losses because I'll be down even more on them, and then take a step back and reassess the market. And it just will be what it will be. But for the moment, I maintain my conviction. I'm putting my money where my mouth is. I'm maintaining the positions that I have on. I'm managing them as best as I possibly can, even as I am to some degree getting squeezed from a positioning perspective. But just is what it is. That's all I've got. I am happy to turn it over to you guys. Dennis saying, big shout out to this desk for real. I've learned so much the past year and a half here, and some really good stuff too that increases my edge. Awesome, Dennis, love it. For Mike H, market dynamics are more suitable for a correction with positioning, as you mentioned. What persuades me on where we could be bigger picture are things like yield curve inversion and SAM rule with the recent jobs revision. Is the SAM rule triggering? I haven't seen that. Looking more like they were very delayed instead of duds. Okay, yep. I mean, there's a whole host of things I think you could point to on the downside, but none of them will trigger. But the thing about the way markets work is and this is what I was talking with JR about today. And he definitely trades a little bit differently than I do, but he's super awesome and knowledgeable about trading and a phenomenal trader. Is when this happens, it's going to happen all at once and it's going to happen fast. It's going to happen all at once and it's going to happen fast. And I think that that's going to actually create a lot of pain for people who are becoming complacent with the market moving higher. One of our traders, I won't mention his name, it's because of privacy reasons, but I'm sure he doesn't mind the story and probably wouldn't mind if I said his name either. Was just texting me into the close about him talking to someone else and saying, I guess the person he's speaking to works in a hospital, about how the workers, the employees of the hospital, are like bragging to the nurses about how much money they make trading stocks, what stocks they're buying, what stocks they're trading, and all this stuff. And that's also like one of those huge late signal things. I think Jesse Livermore described it in a different way back in the day when it was like you go and get your shoes shined and the shoe shine guy is asking you, is giving you stock tips, then that's when you know. And it seems like we're at that point in the cycle now as well. But, we still can't get anything to trigger any degree of downside in this market. We haven't had more than a 2-day pullback since April. The statistics are starting to get stunning in terms of how many days up in a row, how long it's been since we had like a 1% or 2% down day. And I think people forget, because we have short memories, what it feels like to see even just, 3 days in a row where all 3 of those days are down 1 to 3%. When it happens, it'll happen very fast. Over on the YouTube, what's your target on your NVIDIA short? My game plan in NVIDIA has me down to like 140. If this thing could ever break some support levels, keeps almost doing it. But my game plan basically has me down to the 200 day. Might get adjusted along the way, but that's the answer to your question. I'll be getting smaller the whole way down as well. From Cyril, insane squeeze in the Russell. Do you see it as a day one? It is a day one. Yeah, it's a day one. I do see it as a day one. Now all indexes made new all-time highs. It feels like sellers went to vacation. Sellers went on vacation back in April. They haven't been here the whole year. Today was higher volume but doji in the SPY. Is it because more buyers plus sellers were selling into strength? I think it was just the day after the Fed was creating a lot of volume, honestly, with everything that's going on and a degree of forced buying that was coming in, but then some weakness in the Qs coming in the afternoon. I think it just was a higher volume day because of the event that just occurred. But yeah, interesting to see like a higher volume doji in the SPYs, a higher volume doji in the Qs, but an IWM that closed on highs. So you don't have like all 3 of those were giving dojis. They're like, okay, maybe that's a technical signal too. But it's not. I mean, it is for the SPYs and Qs, but you don't have confirmation across the board. From Steven, yesterday you said you don't backtest. How do you estimate EV for a trade? And how do you decide between A, B, and C setups? I don't estimate EV for a trade because everything I'm doing is just very technical. How do I decide between A, B, and C setups? I have a whole training program class on that. That's like an hour long. But basically, the short answer is risk, reward, and probability of success. So risk, reward is very simple math. And by the way, we had some great intraday call-outs today. That just reminds me. We had a bunch of calls today that were very tight risk but large reward profile. And many of them did not work, but most of them worked enough. And then some of them actually really worked. I'm not going to go back and try to find them all. But we had a bunch of really good selective calls today. But risk, reward, and probability of success. Probability of success comes through what I describe as layers of probability. All of these different things that can impact the market at any given point in time. There's probably like 7 or 8 of them that are very ubiquitous for almost any trade that you take, and there's a lot of one-offs even beyond that. So, for example, most basic example is the market. You're taking a trade in a stock. Is the market trending higher or lower? If it's trending higher, you're going to have a higher probability of a long, and if it's trending lower, then you'll have a lower probability of a long. And you assess all of those layers of probability in conjunction with the risk reward and with the risk reward to then grade your trade between an A, B, and a C. So that's the short answer, and I hope that helps. Sherry saying data storage sector like SanDisk and WDC is going nuts, completely going crazy. From Robert, in terms of market correction, where do you think 600 for the SPYs? So I don't want to give an answer to that question. I very much need to see what the pullback looks like as it's happening and take it as it comes. It is really my answer to that. I can't predict, like, I feel confident the market should pull back, but I can't give you a price target when we're still sitting here at highs. Let's assess what things look like when selling actually occurs, what a lower high looks like in this market if it ever occurs, what the setup looks like as things break lower, to then assess where we can actually get to from a target perspective. And also, I think how much time it takes to get to those levels is also going to be important. I don't really want to be fighting, and I'm saying this way ahead of time, I don't want to be fighting bullish seasonality in November. But we'll see what's happening at the time. From Daddy Trades on the YouTube, absolutely loaded the boat on SPY March 2026 650 puts. I will sell when they double. I believe we will fill the 570 weekly gap before the next pump. We need a decent pullback and reset. The market needs a decent pullback and reset. 570 gap? 570 weekly gap? Wow. Okay, you're looking deep. I remember when 570 was my target on the long from April. Whoops. And it was a great trade. It was a great call. Back over to the VTF from Dennis. Are you concerned at all with a very bullish Russell? It's going to get hard for the other indices to really trigger down. Don't we need some form of correlation and a pause in this constant dispersion? Yes, 100%. I think that the S&P and the NASDAQ can go down without the Russell because of market cap weightings. If you start to see like a further selling again in the AI trade, you could see like what that would turn into would be like a grind down in the market on the SPY and QQQ level with the IWM showing strength. In order to see a real down move, you need to see correlations increase and the VIX to start probably moving a little bit higher. And that's why when I was just assessing the daily candles here, SPYs and Qs, I like the doji. IWM's not confirming it. So you have to take pause on that Russell strength. You have to take pause. I might have missed UVixie Bull's question. Maybe not best for an afternoon meeting to post this, but I just wanted to recommend a stock that just IPO'd. Company is, be careful with the word recommend. Company is called Netscope. I use them with my day job and bought a bunch today when it started trading. NTSK. Okay? NTSK. Yeah, I would just be careful with the word recommend. You can give the reasons why you like it, and people can digest that information for themselves. What else? Dennis, I read already from Shitanshu. I'm a new trader and have been attending pre- and post-market meetings. That's great. There's a lot happening, and I appreciate some guidance on what I should focus on and follow as I get started. How long do you think it will take before I'm ready to start trading confidently? So the first thing I would recommend to you, and I'm not sure who your manager is here at T3, but I can see that you're a T3 trader because I can see what your email address is that you're logged in with because I have admin power here. Um, First thing is that you need to make sure that your manager set you up with the training program classes. I think that's your starting point. There's like, I don't know, 13, 14, 15 of them. The average one's probably like an hour and a quarter. Go through the training program classes. That'll give you a foundation for your trading and it'll help you better understand the things that we're talking about in the virtual trading forum in the morning and afternoon meeting. When you go through those training program classes, I then recommend that you rewatch them after like 3 to 6 months because then you're going to get a lot more out of them on the second watch when you've now been part of the team for 3 to 6 months, and then you go back and you rewatch them. So that would be where I recommend that you get started with. And then, participate here in the team. So, glad you're stepping up to the plate. There's a lot of people that are in here every day that don't communicate, and it's to their own detriment, as much as I would love them to. Keep stepping up to the plate. Communicate what you're trading, what you're involved in. Ask for feedback. Ask questions about what I'm trading. Ask questions about what Dennis is trading. Ask questions about what Josh is trading. That's how you learn, is just by constantly communicating. And then beyond that, obviously the morning meetings are great. The afternoon meetings are very educational. But read Pat's note every day. When you begin to start reading Pat's note every day, if you've never read a note like that before, you're not going to understand a lot of it all the time, and that's fine. Just keep reading it anyway. Uh, Things will begin to seep in. You'll begin to understand things differently. And also, we have these really great AI tools now where if you don't understand a sentence in Pat's note, you can copy and paste it into an AI program and ask it to explain it to you. And that's a lot of how I've learned, honestly, at this point. It's how I continue to learn. So that would be the starting points, I think. How long do I think it will take you to start trading confidently? That's a loaded and difficult question. I could say 6 months to a year. I could say never. um, the truth is, you begin to trade confidently when you begin to have faith in consistent game plans that they can make you consistent money. Um, so the goal of a newer trader is to work on developing their edge. Their edge is a rules-based approach to markets that is consistent and repeatable over time, and then that edge is manifested through the game plans that a trader creates. And then, in my opinion, the key to being a successful trader is to be able to have the discipline to consistently follow those game plans that you establish for yourself over time. So when you have developed strong game plans that are consistent and repeatable, that's when you'll begin to start trading confidently. How long is that going to take? Varies dramatically from person to person. And I don't know what your experience was like before joining the team. I don't know if you're 100% entry level and you've never traded before, or if you have some previous experience, but at least 6 months, to a year. Good potential of it being more than that. From Ben S. Is there some super secret meeting that we don't know about between the big banks, funds, etc., market makers, and they just say enough buying and time to sell for a percentage correction? I could see how you could think that. Sans an outlier event like COVID. Not conspiracy theorist, but this gap up today was super frustrating. I could see where you're coming from that. I really don't think so, honestly. I think there's just too much money that's out there. I think we move based on sentiment and flow of funds, and that's it. And markets work in feedback cycles. That's the biggest thing. Markets work in feedback cycles, and those feedback cycles can be very hard to break. We have been in a feedback cycle of buying for many, many months. It's been one cohort after the next that has created more buying and more buying. And we've been trying to study as a team here when that can switch, when they run out of juice. And, I think that we're closer now to an inflection area that could enable the market to go from this feedback cycle of buying to a feedback cycle of selling. But you need it to actually trigger. And until it triggers, the trend is your friend and it continues higher. I hope that helps Ben, but I certainly get it. Yep, yep. It tends to be how it happens. All right, everybody. I am going to lick my wounds from today by climbing a mountain tomorrow. We'll see what this price action looks like tomorrow. I'm probably going to be tripping over rocks, climbing up this mountain, looking at my phone, seeing where prices are, which is annoying after today's session. But I'll be up nice and early, get some bids out in the market, maybe add to a couple shorts if we gap up, and then get the bids out, and then go for a very long walk. So I will see everybody on Monday. Have a great night, everybody. See you all then.